Joining us now to talk about the latest travel trends and how it impacts energy markets, Patrick Haan, head of petroleum analysis at GasBuddy. Good morning to you. What do you think? What are we going to be seeing? Is sticker shock or not?
Oh, thankfully, Andrew, not a whole lot of sticker shock. Prices up modestly, just 6 cents from last year. It's interesting to watch the trends, though. TSA predicting and already seeing some record number of travelers via air. Our week-to-date gasoline demand data showing that week-to-date through Thursday, compared to last year, gasoline demand down about 7.7%. So it looks like 2024 might be skewing towards air travel, not necessarily on the road. Certainly, there'll still be millions of Americans out there. They'll be paying about $3.61 a gallon. That's down from $3.69. The good news, Andrew, for anyone hitting the road this summer is we expect progressive decreases between Memorial Day, July 4, and then Labor Day. Of course, there are the typical caveats. Mother Nature, hurricane season is a big wild card. And we have seen a rash of minor refinery issues in the Great Lakes. That is going to be something that could bother motorists this summer. If there are refinery outages, that could temporarily drive prices up locally.
All right. You know, it's a very interesting issue because people talk about gas prices as sort of a billboard for inflation, and it's a political issue, especially in an election year where you see the price of gasoline on the corner of every other block that you go to. How quickly do you think it does come down? And if you were to handicap the possibilities where you said in some local markets it may go up, we're going to see that and where?
Well, you know, I watch it from the West Coast. California is an extremely tight market. Really, all it takes is one minor issue on the West Coast to really derail California and potentially Arizona. Arizona has their own blend, or the Great Lakes. We've seen some of that tightness emerge there. Now, with gasoline being released from the Northeast Gasoline Reserve, that could push prices down a little bit in your neck of the woods there in the Northeast. Areas like New Jersey, New York, Boston, Maine may get a little bit of a tailwind from that in the form of falling prices here over the next 4 weeks. But I think for the rest of us, the national average should modestly decrease, maybe 5 to 10 cents between now and July 4. So not a huge drop, but I think that could accelerate, especially as we get into August. Again, the big wild card is hurricanes. There's a pretty significant risk this year that something could develop in the Gulf of Mexico. Of course, that's where North America's largest refining hub is, right. A particularly sensitive area. But by the election, if the seasonality goes per normal, we could see the national average falling below $3 in November or December.
How much do you think this surge in travel demand, you're talking about up 18% this summer, is actually a function of the price? Meaning we kept saying we were living in this YOLO world where people were, you know, every summer, more people were going out hitting the road. And you kept thinking, is there a ceiling here?
Well, yeah, I think to your point, it's talking out of both sides of our mouth. At one point, Americans are griping about the price of gasoline, but as the numbers show, it's not going to really hold anyone back. I mean, we get 3 or 4 good months a year, at least for us here in the northern half of the country, for most of the country. Summer's not everlasting, and so Americans really don't care what gasoline prices are. Having said that, we're still going to see a lot of complaining about gas prices being above average. But if you do the long-term inflation-adjusted numbers, this gas price paid today is not necessarily significantly out of that norm. Americans are getting paid more. And so adjusting for inflation, gas prices are nowhere near record levels.